Gotta hate taxes. I just learned about a tax I had no idea about, a secret tax for acquiring a property in the Dominican Republic, the way in which I'm going to acquire it. So today I'm gonna break down everything I've learned and hopefully you need to know about property tax, income tax, and this stupid, secret, crazy tax I had no idea about. All that while I run some errands for my wife, but let's dive in. Here's a quick rundown of how property taxes work in the Dominican Republic. Essentially, you pay 1% of the value of the property above like 8.5 million pesos. That breaks down to about 160,000, although I've heard 180,000 USD. So maybe my information's a little off, but you get the point. And really, it doesn't matter a ton. Making it super simple, if I bought a $200,000 property, USD, in the Dominican Republic, I pay 1% of the amount above $150,000 to $180,000. The reason I say it doesn't matter much is if it's 1% over $150,000 and I bought it for $200,000, I'm paying $500 a year. And if it's above $180,000, I'm paying $200 a year. I mean, over the course of the year, you're not talking about a ton of money. Point is, taxes are waived up to a certain amount and then you pay 1% over that amount. There is one very popular exemption to all of this, which I'll talk about a little bit later in the video. Many of you already know what it is. Some of you may not, but when it comes to the secret tax I'm referring to, it's better to talk about a way you can waive property tax later. So let me use me as an example to make this relevant. I'm acquiring a one-bedroom condo in Cortecito for 170,000 US dollars, which means depending on the threshold for property tax, I'm either not paying any property tax or maybe like $100 to $200 a year. Negligible. But I plan to acquire this property, maybe as many of you, as an investment property and rent it out, Airbnb it out, whatever, which means I'm worried about protection. There are three ways that I can think of that I can acquire the property. The first, very simple. I just acquire it in my name. I buy it, I put in my name, voila, I'm the owner. Now, while that's very easy, it offers me zero liability protection. And also I could be exposed to a 15% income tax in the Dominican Republic. The second way is that I can acquire it in my US LLC, my limited liability company. Again, super simple. I get the liability protection of the LLC and it's clear and understandable since I have an LLC. The third way is using a Dominican version of an LLC, which is called an SRL. Let's give this a shot. Stands for Sociedad de Responsabilidad Limitada. Every time I say that, I feel like I'm like, but that's what it's called. Essentially, a limited liability company in the Dominican Republic. Now, the few ways this is the best option over the other two of acquiring it in my own name or in my US LLC is this. One, I get full liability protection. Acquiring in my name, I wouldn't get that. In an LLC, I get it, but only if that LLC complies with local law in the Dominican Republic. Two is vendor management. If I plan to have a property management company, cleaning company, or whatever, it's going to be way more easy and streamlined to use a Dominican SRL instead of my US-based LLC for many different reasons, including taxes. And three, if I do ever plan on having a mortgage on the property, an SRL with a local bank is gonna go way further, way easier than an LLC from another country. All factors to keep in mind, and a great time for me to remind you, I am not an accountant. I am not a lawyer. You should consult with one before you do anything. I'm sharing my experiences. I'm sharing what I've learned. I'm sharing the stuff that I've learned from different articles and attorneys and ChatGPT, and I'm applying it in my own day-to-day in terms of acquiring this property. But please consult with a lawyer. Please consult with an accountant. And if you need a lawyer, down below I have a link to the one I'm using right now. Happy to refer you to him. And just full transparency, he'll pay me a referral fee if you do. Okay, so let's say we're gonna acquire this property in an SRL. Here's what that's gonna look like. First, I get full liability protection in the Dominican Republic. Second, I will pay a 27% income tax in the Dominican Republic. Now let's compare this real quick. 27% if I acquire it in SRL, 15% if I acquire it in my own name and have to pay local income tax in the Dominican Republic. The difference is I can't write off anything on that 15%, but I can on the 27% inside of an SRL. Let's make numbers out of this. We're gonna say I'm Airbnb-ing this property and I'm getting $100 a night with a 60% occupancy rate. That means 219 days out of the year, somebody is in my property at $100 a night, which is an income of $21,900. Now again, lots of little tax nuance here, so I'm not gonna get into the, well, why would you pay Dominican tax, US tax? There's things like the foreign income tax credit, a bunch of things that you and I need to consult with a lawyer and a CPA on. But just understand, for me, a consideration is, do I pay a 15% income tax as a person to acquire this property in the Dominican, or 27% by acquiring this property as an SRL. If I acquire it as an individual, the $21,900 is taxed at 15%. Quick math, that is $3,285. Now, if I acquire it in an SRL at a 27% tax, that $21,900 at 27% is $5,913, more than the $3,285 I would pay personally. However, when I factor in being able to pay a salary, cleaning expenses, mileage, and even relevant taxes I pay when I go to the store. Ever been asked if you want a comprobante fiscal? That essentially is, do you want a receipt for whatever you purchase that's relevant or related to your property for you to write the tax amount off against your income? There's a lot of things that could apply here. Also, cell phones, Wi-Fi, there's a lot of different things you can write off, but let's just say I can write off half of that $21,900. At 27%, that tax now becomes about $2,950, less than the $3,285 I'm paying if it's acquired in my name at a 15% income tax rate. And again, these are all Dominican tax rates. You may or may not have this as a relevant play for you, but for me, it's relevant. With the example I just gave you, I think it's a conservative estimation of what I can write down. Doing a lot of different theories on math here, having the SRL taxing me at 27% with the ability to write things off every time pencils out to my advantage versus just acquiring it in my name at 15% income tax. And I get liability protection, which, to be honest with you, I'd be willing to pay even more for. Now here is the secret tax that has been thrust upon me that I had no idea about. Like I said, I'm buying this for $170,000, which means I'm paying somewhere between $0 to $200 in property tax. Next to nothing. But Dominican SRLs come with a 1% annual asset tax. Frickin' taxes. What does that mean? That means that whatever the value is of the assets inside of your SRL are going to be taxed at 1% annually. It's an asset tax, not a property tax. So if you had equipment in the SRL, if you had property, whatever, the total of the assets is taxed at 1%. So that means I'll pay $1,700 per year in asset taxes. But a couple of kickers on this. First is that asset tax is waived if my income tax is higher. So let's go back to the example I just gave. If I'm going to take in $21,900 in a year and I'm going to write off half of that and then pay a 27% income tax through the SRL, company income tax, I'm paying $2,950 per year. We'll try to make this graphic image so you can see it, but $2,950 is higher than $1,700. Therefore, no asset tax. That said, if I am able to reduce my income tax burden down to below $1,700 a year, which for sure, legitimately, I'm going to try to do legally, then I pay the $1,700 asset tax. They get you going or coming, one of the two. All right, last thing here is, what about Confotur? For those of you that are uninitiated, Confotur is a law in the Dominican Republic where if you acquire a new construction property that has been approved for Confotur, then that property has a 15-year property tax waiver. Think of it like this. You buy property A, it's a regular property, but property B is special. And the government says, wow, it's so special that we want you to take it and not pay taxes. That's what Confotur is. The property I'm acquiring is not Confotur, which, keep in mind, there's really no tax exposure here other than the 3% acquisition tax that I'll pay up front. No other annual tax exposure, or there shouldn't be, unless I acquired it in an SRL, and if my income tax on that SRL is lower than the asset tax. Blah, I'm confusing myself. Let me know if you're following along with me, and if not, drop it down below. I'll be happy to try to explain this even better if I can. So what about if you have a Confotur-approved property where property taxes are waived and you're going to acquire it in an SRL where there's this asset tax? Are you getting hit either way? Well, before I tell you, you got to do something for me. If you haven't already done so, please drop down, subscribe to this channel, hit that like button, leave a comment. All of this activity on the channel helps it grow, and I pray that all of this content is valuable to you. So the more you do that, subscribe, like, comment, the more support I get on the channel. And even more than that, if you are looking to acquire a property and looking for a great realtor, I have a link down in the description you can click on, fill it out, and I'll send that realtor to you. The same for an attorney if you need one as well. I do take commissions from these people if you end up doing business with them. Again, that helps me financially support me and my family so I can spend more time making content like this for all of you. So I appreciate your support. So if you have a Confotur property and you buy it in the SRL, do you owe the 1% asset tax? From everything I've researched, I don't think so. It's the clearest answer I can get for you. I don't think so. Even talking to my lawyer, it sounds like no, but I don't think so. So Confotur rules. But here's the general conclusion that you need to come to. Understand that when you're doing any business in the Dominican Republic, a lot of it is left open to interpretation. Now, some of you on here are going to be very certain on some of these things, and I am just as certain as you are with my certainty, as you are with your certainty, and that we're all certain on our certainty. But when you're dealing with Dominican Republic lawyers, anything, so much can be open to interpretation, including your obligation to the IRS in the United States versus the Dominican Republic, and so on. So just be very mindful as you pursue this path that there's going to be a lot of information and you have to make the best possible decision for you based on the information that you get. And the only way that I know of to get the best information is to pay the best people for it. I pay a little bit more for the citizenship attorney that I'm dealing with. In the beginning, I used to feel dumb, like, I'm getting duped. All these people telling me that they paid $100 to get this done in DR. But as I've been here and I'm seeing those stories of $100 unravel and become major problems, I'm certainly glad that I pay a little extra money up front to avoid the headaches on the back end. Same goes for realtors. Please get a good realtor. So what should you do? In your own name, LLC, SRL, something different. Here's what you should do. Call an attorney and an accountant and ask them for your specific situation. I cannot tell you what to do, nor would I. It's derelict on my part. All I can tell you is this is what I'm going to do. I'm moving forward with acquiring the property inside of an SRL, despite the asset tax. For me, I value liability protection, and I value the ability to mitigate my tax burden as I build business in the Dominican Republic. For you, you may not have any attachment to DR. You may not want any attachment to DR. I do. I want to be able to pay vendors through my SRL. I want to be able to take in income from different streams that I'm creating in my SRL. I want the protection of that entity, and I want the tax strategy available to me in that entity. Doesn't make it right, doesn't make it easier, trust me, but it's something that I want to do. In conjunction with that, I'm learning all of the things I have to deal with as far as the United States tax law and everything else. It's actually not even that complicated. It's just a matter, of interpretation through Dominican law on how it applies to US law. But here's the skinny. For me, I'm never ever going to look to get around the US government with my taxes. I'm going to instead look for legal ways for me to write down my tax burden and leverage something like the foreign income tax credit to reduce, minimize, or eliminate my US tax burden. You always, as a US citizen, need to file taxes in the United States. You don't need to be a CPA or a lawyer to know that. Citizens have to file regardless. My understanding in Canada, it's all based on where you live. So you don't need to file if you live outside of Canada, back in Canada. But that, my friends, is the secret tax that I was not aware of. Maybe you were. You could let me know below. And how I am moving forward acquiring this property in the Dominican Republic. Now, you might be wondering, how do you finance property in the Dominican Republic, whether it's pre-construction or full construction? I did a whole video right over here on that you can tap on and take a look, and it'll answer all of your questions.